Are you a hairstylist feeling overwhelmed when tax season rolls around? You're always scrambling when it comes time to file your taxes and really wondering if you are paying too much in your tax bill? Today, I am breaking down the top tax deductions you need to claim as a booth rent hairstylist to keep more of your hard-earned money and pay less to the IRS. Legally, of course. By the end of this video, you'll know exactly what to write off, how to track it, and how to pay the least amount possible in your taxes. And if you want more hairstylist business and finance tips, make sure to hit that subscribe button and turn on the notifications so you never miss a video. My name is Megan and I am a licensed cosmetologist and booth renter in Oklahoma. I have been in the industry for almost 15 years now, and trust me when I tell you, I have made just about every tax mistake you can make. They do not teach us this stuff in hair school, so I really had to learn the hard way. Through years of trial and error and finally getting the right CPA in my corner, I now have my taxes under control and I know exactly what I can write off to reduce my tax bill. Before we jump into tax write-offs, let's clear something up. If you're a booth renter, salon owner, rent a suite, or an independent hairstylist, you are self-employed in the eyes of the IRS. That means you're running your own business, and just like any other business owner, you are entitled to deduct your business expenses to lower your taxable income. I see too many hairstylists not taking advantage of this and end up paying way more in taxes than they really needed to. So let's go over exactly what you can write off and how to keep more of your hard-earned money. Let's start with the basics. If you don't have a pen and paper handy, don't worry. I have a free tax checklist that you can download in the description below. First is salon rent and booth rent. If you rent a booth or salon suite, you can deduct 100% of your rent because it is a business expense. Even if you work from home, you may qualify for a home office deduction, which lets you write off a percentage of your mortgage, utilities, and Wi-Fi. Let me give you an example. If you pay $1,000 a month for a salon suite, that's a $12,000 tax write-off per year. That $12,000 will reduce your income, which means you are paying less in taxes. Next is tools and supplies. Everything that you use behind the chair, like shears, clippers, brushes, dryers, cape, gloves, shampoos, conditioner, hair color, disinfectants, and even cleaning supplies are all tax deductible. An example of this is if you spend $700 a month on supplies, that's a $6,000 tax write-off per year. Very important though, keep all of your receipts. You can't just use a bank statement as proof for tax deductions. If you ever get audited, having those receipts will save you. Also, apps like QuickBooks Self-Employed make tracking so easy. And the QuickBooks subscription is a tax write-off. Next is continuing education and certificates. If you've taken a hair class, paid for an online course, attended a beauty trade show, or renewed your cosmetology license, those expenses are 100% tax deductible. Investing in yourself is great because your skills increase, which helps you make more money, but you get to write that expense off. Example, that $700 in-person class you took is a tax write-off. Next up, marketing and branding expenses. Spending money on Instagram ads, business cards, flyers, or website or salon logo, all of these count as business expenses that you can deduct from your taxable income. Example, if you spent $200 on Instagram ads last month, you can write $2,400 off per year. I have a question. What is your biggest expense as a hairstylist? Drop them in the comments. Just as a reminder, you can download my free checklist at the link below. Now, let's talk about insurance. If you have business insurance or professional liability insurance, it is 100% tax deductible. It protects you and saves you money at tax time. Also, most people don't know this, but you may be able to deduct 100% of your health insurance premiums for yourself, your spouse, and your dependents. This deduction is only available if you don't have access to an employer-sponsored health plan through another job or your spouse's employer. Keep in mind that the health insurance plan must be in your name or your business's name if you have an LLC or S Corp. Just a little example, if you pay $400 per month in insurance, that's a $4,800 deduction per year. Next, vehicle. Yes, you can write off your vehicle if you use your vehicle for business, whether driving to buy supplies, attending classes, or visiting clients, you can deduct these expenses using one of two methods. The first method is a standard mileage deduction. The second method is actual expenses method and with depreciation. The first method allows you to write off 70 cents per mile in 2025, which is often the simpler option and works well if you do drive a lot, but have a lower vehicle cost. The second method lets you deduct costs like gas, maintenance, insurance, and even depreciation, which may be better if you have a higher vehicle expenses or a newer car. Please, please, please note though, you can't go back and forth between these methods. Once you choose an actual expense and claim depreciation, you may be required to continue using that method for that vehicle. I would really talk to your CPA about your specific situation so they can guide you in the best decision for you. Next up is uniforms and work attire. Work-specific attire can be a tax write-off, but there are some rules. You can deduct the cost of uniforms, aprons, or any clothing required for work that isn't suitable for everyday wear. If you purchase black clothing for the salon, it typically is not as deductible unless it is a required uniform with the salon logo. However, if your clothes are damaged on the job, like getting hair color on your jeans or bleach on every shirt, you can write off the cost of replacing them. Additionally, dry cleaning and laundering your work attire is a deductible expense, so keep track of those receipts. Example, if you spend $500 on work clothes and $200 on dry cleaning, that's an extra $700 tax deduction. Next up is gifts for clients. Showing appreciation to your clients through holiday gifts, thank you presents, or loyalty rewards is not only great for business, but it is a tax deduction as well. The IRS allows you to deduct up to $25 per client per year for business gifts. While this limit may seem low, there is a little bit of a loophole. If the gift includes your business name or logo, it may qualify as advertising instead of a gift expense, making it 100% deductible with no cap. This means items like customized mugs, tote bags, or branded hair care products could fully be written off as marketing expenses rather than being limited under the gift rule. Additionally, if you bundle a gift with a service, for example, offering a free deep conditioning treatment as part of a holiday promotion, that's considered a business expense rather than gift. Sorry, I cannot talk today. Example, if you buy 20 holiday gifts at $25 each, that's $500 tax deduction. But if you add your logo to those gifts, you may be able to write off the full amount as advertising. Next, retirement contributions is not just about saving for the future, but it also allows you to reduce your taxable income at the same time. By contributing to a solo 401k or SEP IRA, you can reduce your taxable income, which means you'll owe less in taxes while building that long-term wealth. The IRS allows self-employed individuals to contribute up to $70,000 in a SEP IRA for 2025 based on income, or $23,500 in a solo 401k. The best part, every dollar you contribute lowers your taxable income, which can put you in a lower tax bracket and increase your refund. If your business has a high profit year, maxing out your retirement contributions can be a smart way to reduce your tax burden while securing your financial future. Example, if you contribute $6,000 to a retirement account, you could save $1,500 in taxes if you're in that 25% tax bracket. That's money that stays in your pocket instead of going to the IRS. Last but not least, home office deduction if you work from home. If you run your hairstylist business from home, like an example, if you're managing your booking, creating social media content, or selling retail products, or communicating with any of your clients, you can deduct part of your home expenses, including rent, electricity, Wi-Fi, and even your property taxes. Talk to your CPA about this. Let's go over an example. If 10% of your home is used for your business, you can write off 10% of your rent and utilities. Win-win. Remember, if you want my tax write-off checklist, click the link below and I will send it to you for free. I hope this video was informative and I hope you have clarity on what you can and cannot write off. If you have found this helpful, don't forget to share it with a fellow stylist. And if you have any questions or need more guidance and advice, drop them below and I would love to help in any way I can.